Hello, grads of FinLearn Academy and fellow traders. We have seen a pullback in the market or a bounce. So now let's see what lies ahead. See this market. Remember one thing has breached the 200-day moving average. So I will plot the 200-day moving average on Nifty. So the application which I am using is MTrade. Any pullback towards the 200-day is a strong resistance. We are already there. So it's time to book your profits if you have traded this rise because this level, which is between 16,800 to 17,000, is tough level for the market to cross. What we had was a mean reversion trade. Market went below 200-day, became oversold on a short-term charts, and again a mean reversion towards the 200-day level or the region has happened. So here we have having multiple resistance. You have this falling gap and the 200-day moving average. So 16,800 to 17,000 is a level to book your profits on your long trades, and we will have a sustainable move only once we cross the 200-day average. And remember one thing, for that you will get enough indication. And also if you see, we have a running channel as far as Nifty is concerned. We had this throw under, again it pulled back, and there is the upper end of the channel. So this resistance level is going to be too strong. Once this is crossed, we will see a strong pullback for or a reversal of the current downswing, like the one we had over here. But right now, we don't have any technical evidence of such a strong move. All the moves are currently counter trend in nature, which are filling this gap or retracing or a mean reversion towards the 200-day moving average. Once this channel breaks, then only we become bullish on the markets. Just see over here, fine. Break of the channel gives you an indication that the low is in place. You had a channel breakout over here. Then you had this rally, fine. So when market is going to stage a strong rally, nobody is going to miss out. We'll have enough evidence for that. So right now, uh, we don't expect this leg to unfold. We are expecting the correction to continue. Break of this channel above the 200-day will give us an indication that the low is in place. So on the upside, keep a watch on 200-day moving average. On the downside, friends, the levels which we had read recently has a strong significance as far as your long-term charts are concerned. So somewhere around 15,800 to 15,500, we will see the sharp pullbacks happening. Why I'm saying that, I go to the monthly charts. See, on the monthly chart, there are confluence of this swing low and this high, and this swing low and this high in context of the golden ratio, which is 62%. If I take this swing high and this low, we had touched the golden ratio of 62%. If I take this swing low and this swing high, one second. So this golden ratio is somewhere around this level. Getting it? So now what I do is, I'll create a band based on golden ratios. So which is the 62% of, this is what we call a confluence. Okay, this one. I'll create a band over here. So your sharp declines are likely to find support at or around these levels. So now let me remove it. That's the confluence of the golden ratios. So I'll remove the retracements now, right? So that way, in between these levels, you have two 62% levels merging. So now if I take now this to the daily charts, so we are likely to trade in between 15,800 and the 200 day. This is your broad trade setup. In between, you have to pick up days which are bullish, days which are bearish, and trade accordingly. But we are going to stay confined in this band and we'll have enough consolidation over here. So we are buyers on declines towards 15,800 to 600 levels. This is a buy zone for a pullback. And once you see a bounce towards the gap or the 200 day, let's take into account it's a level to book profit. So the volatility will continue. We don't have any signs that the volatility is over, and this is going to be the broad trading range for the markets. Right. So that was for Nifty. So now let's go to Bank Nifty. Bank Nifty is weaker than Nifty. Why? Because Nifty had come close to this gap. Bank Nifty has not. And in context of this Bank Nifty also, if I go to my monthly charts, it is already around this support band. So further push will be there. Fine. I will take this one full. So this is a broad 3000 point support for Bank Nifty. If I take this low and I go to the daily charts. So any dips on declines, you will get this counter trend move because this is the low of October 2021 and then April also, right? So this region will attract short covering or buying. But at the same time, there is not enough steam in the markets to trigger a reversal. All we are seeing is a pullback towards the 200-day moving average. And again, the Bank Nifty, there is a gap over here. So Nifty and Bank Nifty both are likely to trade within the medium term supports and on the daily charts, the gap and the 200-day moving average. So we don't see any end to this volatility is likely to continue. But at the same time, make sure your downside levels are very well defined for you to buy into a panic declines with a strict stop loss in place for a bounce. So now, see, the stronger the market declines, the stronger are the bounce. Remember one thing. And in between these levels, you have to figure out days which are bullish or bearish as a swing trader. So both Nifty and Bank Nifty are buy on declines towards the medium term supports and booking profits or sell on rise around the 200-day moving average or the gap. So that's all on the weekly update, friends.